Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Tony Seo, Head of Regulatory Strategy and Innovation for the Nasdaq Surveillance business. Tony, it's great to see you as always. Welcome back to TradeTalks.
Thank you, Jill.
All right, let's talk about the SEC for a moment here. Recently publishing its 2024 Examination Priorities Report. It's an annual report that the SEC has published for over 10 years now. Tell us more about the purpose of the Examination Priorities Report and what does it cover?
So the Examination Priorities Report covers what the kind of examination division of the SEC is going to focus on for the coming fiscal year. Right, so it is only for that examinations division, but all the divisions work actually kind of incorporate quite well together at SEC. So it is quite helpful to get an idea what the SEC is going to focus on in the coming year. What's interesting, I think, kind of about this one is they've managed to get this one out fairly early. Right, so which kind of gives an idea what's happening in the coming year. The last one only came out back in February this year.
Which is interesting because if it only came out, I don't know, about 9 months ago, let's call it 8 months ago, if that much, this one's out to align with the start of the fiscal year. Were there any notable differences from last year?
Yeah, I would say probably the most notable difference is actually exclusion. So back in the 2023 one, there was actually a fairly prominent priority around ESG for ESG funds, ESG products, ESG advisors. Right, for 2024, that was kind of noticeably kind of absent. Right, I don't think that means that the SEC isn't going to focus on ESG as a whole. Right, so there was a recent proposal for a rule around greenwashing. Right, that came out about 2 months ago, and there's very likely to be at least one more rule proposal this year around ESG disclosure. Right, but it kind of does show that from an exams perspective, it may not be the highest priority, but from a rulemaking perspective, we're still seeing ESG quite high. And then kind of similarly, kind of in terms of like exam priorities related to new rules, one of the priority items for 2024 was around Reg BI, Regulation Best Interest. Right, so those are a set of rules that came in effect back in 2019, really focus upon kind of new standards of conduct, as well as the kind of like clarifying the fiduciary duty kind of broker dealers and advisors. Right, so the first enforcement of that was back in just last year. Right, so we're likely to see kind of that being prioritized as one of the differences as well. And actually kind of talking about differences, right, so every year the SEC talks about emerging technologies. So well, not every year, but the past 4 or 5 years or so far. The past few have kind of really focused on crypto, and they've also kind of focused on things like online trading platforms. So this year, for the first time, they singled out artificial intelligence, which I thought was quite interesting.
Yeah, well, it really is. I mean, every conversation we have now, regardless of the topic, is about AI. And just this week, the White House issued a landmark executive order to help safeguard and manage the risks of AI. And on Tuesday, SEC Chair Gensler, he made a statement about the risks of AI. Can you elaborate on the implications of these actions on the markets?
Yeah, so I would say on the executive order, that's really kind of focused upon kind of the safety, transparency, kind of privacy, kind of related matters. So really kind of around what they've called responsible innovation, right? If you look at what the SEC has been saying in the past few months in kind of Gensler's recent statements, it's kind of on that similar vein around responsible innovation, right? There's a quote from Gensler. Gensler said the other day, a growing issue is that AI could lead to a risk in the whole system, right? And this is something that he's said kind of like a few times in the past, and kind of what I kind of feel he means by this, he's talking about kind of the potential risk of a monoculture of AI models, of AI technology kind of in the financial markets, right? And what that kind of monoculture could create is essentially a type of kind of herding effect, where the same type of inputs produce exactly the same outputs and create herding behavior, which creates a systemic risk in the financial markets. And there's a kind of potential for kind of things such as kind of flash crash style events, right? So that's kind of what Gensler's been kind of warning about. But it's not kind of all doom and gloom. So Gensler's kind of, I would say in the last month in a hearing, Gensler talked about the SEC's own use of artificial intelligence for helping to monitor markets themselves, right? So you kind of do see kind of pros and cons there.
Yeah, well, I guess it's almost like, you know, algorithms, right? In high frequency trading, everyone's going to have their own models. So we'll see if it becomes herd mentality. But to wrap up here, what other key trends did you see from this year's report? I
would say for 2024, since it's been a kind of short time between 23 and 24, I would say kind of like there's a lot of trends that were kind of pushed in 23 are going to continue in 24, right? So those being kind of AML, being kind of like stability and kind of Reg SCI, resiliency, and then kind of finally around kind of cyber and crypto, right? So these are on the kind of AML front, they're really talking about the kind of essentially the ensuring that you have the appropriate policies and procedures in place, right, for the types of products and the size that you have, right, and that's a real focus there. We've already been seeing some fines coming out around AML processes this year, right. On crypto, I think we've been talking about crypto previously discussed before, and there's going to been a lot of SEC focus on crypto in particular, right. And then on kind of resiliency, cybersecurity, kind of Reg SCI, right, I think this is kind of a general macro trend that I'm seeing a lot of regulators talk about globally. Right, and just generally on point, on those three items that I mentioned, that's kind of very in line. I talk to regulators globally, and those 3 points are very in line with what we're seeing kind of from a global kind of regulatory trend perspective.
All right, Tony, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.